Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what we think is likely to happen next. Now as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it's the first place that we go to notify you of everything that's going on in the crypto space. If you're looking for a little bit more from the crypto space, then why not go ahead and check out the Patreon services, also linked in the description below. We offer a lot more for our members, so why not check that out if that's of interest to you. Okay, let's jump right down into this thing. So here we can see we've got all the thumbnails from the recent videos for Bitcoin. So we can see that we were expecting 29k. It was about 2 days ago. Actually, it's down here on the 2nd of May. Okay, we're talking about 29k potential move upwards. This is mainly because of a fair value gap and kind of the analysis of Elliott Wave theory and smart money concepts coming together quite nicely. We'll jump into that in a moment down in the charts. But we'll just say we're talking about the Fed. We're hitting resistance up at this upper area, and it was also possible that we reversed down while simultaneously also still having that potential move upwards. So we did see ourselves getting heavily rejected right on this area once we had this video put out, and then basically Fed kind of interest rate hike did push us up, and we kind of see this now hitting this upper area of resistance right up here on this previous range. So we're going to jump down. We're going to obviously add the vertical line, the new arrow. We'll add a new thumbnail into here. So let's jump down into the charts. We will take a look at smart money concepts, but before we do that, we'll jump into the Elliott Wave theory side of things. Okay, so we are overbought on the 1 hour and 4 hour at the moment. I think 8 hour is progressing quite nicely. Yep, it's progressing quite nicely to the upside. 12 hours still has some room in it. 16 hours has room in it. 20 hours does daily. Still has a lot of room in it, as well as the weekly being overbought. Okay, so there's a lot of negativity across those timeframes from the stochastic RSI. Okay, we're not really seeing momentum pushing price upwards. We're seeing momentum looking to shift price downwards. Okay, and so we still have our bearish structure according to Elliott Wave theory. Okay, so we can see the stochastic RSI very much aligns to the idea of these structures that are emerging. What we've done so far is had this three-wave structured move here, and it is still possible that we have a little bit further to the upside to finish this structure off. Okay, so let's go and dive into this, right? So if we come and take a look at this from this higher range to this lower range down here, okay, we have that entire 100% Fibonacci level. Now, typically, a wave 2, which is one of the possibilities here, would go between 50 and 88.2%. You can see that we're right inside that zone right now. This is 28,795 to 29,786. Okay, so we can still see that there's room to the upside here to fall within that typical wave 2 positioning. Now, when you take a look at this, and if I remove the fib from here, and we take a look at this level, so we measure that first pull up, we push down, and then we rallied up again, we can see that there is actually a need or a requirement, just a fraction actually. Let me just pull this back down. I don't think we got that on the low wick there. See, we're just a little bit off. Let's pull that down. There we go. So we can see that there's a potential requirement here just to go up a little bit further. And we can see it's not much. It's very minor at this point, but between the 1 and the 1.236, you get this little yellow box area here. This is 29,346 to 29,644. Okay, so I can go ahead and just remove this, and you can start to see that there's a yellow box target range inside our bigger wave 2 expectations right in here. Okay, so it means there's very limited upside now, and we can see that in the stochastics on the 4-hour charts and 8-hour charts and so forth, right? We can see these things where there's still this idea that we can break up higher. Now, under this assumption that we are running out of momentum to the upside, not only do we see a tilting mechanism here to the upside, okay, so we see higher lows and we see higher highs right inside here, okay? This is a bearish tail in itself, but we also know that there's a very limited amount of upside left, okay? Now, we know that we are within the typical range of a wave 2. We have our scope here for a 1-to-1 ratio of our 3-wave structure for that wave 2. 1, 2, and 3, or A, B, and C, and we have that range kind of scoped out. That means that it's unlikely that we're to go and push up higher than 29,969, which is the swing high of our wave 1 origin over here. Okay, this 5-wave structure here, so the origin level. And we know that this is below our wave 1 or wave 3 origin up here on the macro level, and that's 30,036. So we're expecting to stay below those levels, right? If we do push up higher than them, then we have invalidated this idea of a structured move to the downside, okay? So we know where invalidation would be, we know what would change our structure, and we know how we would transact on this. For example, if we were to short the market, I'm going to be looking at shorting the market down here, and I'm going to put my stop loss above 30,036, and I'm going to go ahead and make sure that I'm putting my take profit down lower than here, and specifically if I'm really going to be short in the market for a long time, then I'm going to actually be targeting out the 1.618 at 24,864, and that's going to give me a risk reward ratio of 6.29. Okay, that is sniping a real nice entry on a short position on Bitcoin over a macro period. Okay, now that's going to take quite some time to play out, so there's going to be other opportunities here to make these a little bit smaller. My expectations would be that we'd probably have to come down a little bit around here, maybe have only a 4.38 bounce up and find another snipe entry and take it down. So you don't have to hold these things for a long time if you don't want to, but again, there's the possibility of a short market, shorting Bitcoin within this market structure, as long as it stays in these in this structure, as in below 29,969, then everything there should be pretty decent. So all in all, that's looking pretty good and pretty progressive for where I think Bitcoin is likely to go. Okay, so all in all, Elliott wave theory is kind of telling us we're in a bearish state of play. We've got to be moving down. Okay, so what about smart money concepts? Well, smart money concepts is kind of aligned to the idea that we're still in a bearish market, and we can see this here. We have change of character to bearish, confirmation that we're bearish, confirmation that we're bearish, okay? And so there's nothing here going on that is giving us confidence to think that we're likely to break up higher than the swing high of $31,000. Now, when we take a look at this, we can see that what we did yesterday is right in line with our expectations. So we had this before, fair value gap was over here. Okay, we left this behind, and a lot of people always question whether or not you're going to fill those fair value gaps. And well, we can see here, we rallied up, we filled the fair value gap, and then we dropped back down again, right? And we can see the manipulation that's going on and occurring in here. That's kind of why smart money concepts is so important. Now we can see that there was a fair value gap over here. This was highlighting our $29,000 level, and it's no surprise that we filled this out, okay? Now, what we've gone and done is we've got another fair value gap just down at the bottom here. So price is going to pull back down and fill that out. And we've even filled this one down here already. So it looks like we still have to move down. We've completed our expectations on these moves to the upside. Still a little bit more according to Elliott wave theory, but we're very much aligned here that smart money concepts and Elliott wave theory are telling us the same story through two different lenses, okay? And that is that the market structure is bearish, and that we have all we've done so far, and all we have done is essentially just push up and fill these fair value gaps. So from a smart money concepts point of view, we saw the gap here. We knew we were going to push up, and from an Elliott wave theory point of view, we completed 5 waves down. We were looking for a push upwards. The two things coming together, giving you a nice target range. This being between 50% and 88.2% retracement of our 5-wave structure. That being our wave 2 expectations. Still slightly higher here. That's fine. Smart money concepts doesn't give us that idea that we can still push up higher, but Elliott wave theory does. That gives us the opportunity to snipe in an entry for a short position, and everything else is looking pretty good here for that short. So what do we see? We see a strong high unlikely to get broken. We have a weak low likely to get broken. We can see the equilibrium is right there on the fair value gap. So all in all, it does look like we have to move on down. There's a couple of areas of buying right in here though, so we'll be a little bit aware of those, and there might be something to do there. And there's obviously a lot of selling pressure at the top here. So it's possible that we just sideways trade for a while, or it's more likely that we start that move to the downside and we won't just trade sideways until the weekend, and all that kind of wonderful stuff, which could be a wave 4 positioning over the weekend if we can complete wave 3 over the next 2 days. And what I mean by that is, if I zoom out, I'll just draw it on here, is that we'd have a wave 1, wave 2, wave 3. So if we can complete this wave 3 over the next couple of days, then we can have a wave 4 over the weekend, and then down into the final 5th wave. and so forth. So all in all, yeah, everything's looking pretty good for the structure and kind of what we're thinking. We are looking for a little bit of a move to the downside on BTC here. And so, yeah, let me know what your thoughts are in the comments below. I'm going to leave the video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Don't forget to join us down in Discord, linked in the description below. And guys, I wish everyone to have a fantastic day, and I'll catch you all in the next one. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.